All right, folks, let's go ahead and jump right in. So what we're looking at right here on this chart is the Bitcoin daily. And right now, all of these red and blue arrows are essentially the executions that we've been taking over the past couple of days. And as you can see, really didn't trade over the weekend, but today we were executing quite a bit. And we did push this account up to 28,851 on the day so far. All right, so not a lot of really concentrated trading. I was kind of multitasking at the same time, but we're starting to get really good at this process to where we're able to tell when a candle's getting ready to go up versus when it's getting ready to go down, and capitalize on swings in the market, whether we're bullish or bearish. You guys can see here we're executing short positions and long positions all within the same hour. So we're fluctuating with the market, catching these $30, $50, $60 swings, $100 swings, all within one 15-minute candle. Okay, so definitely a tutorial coming out with this, this process and how we analyze this and how we're able to capitalize off this. And you have to be attentive, right? Most of the losses that we took during this day was because we either weren't watching the charts or because price just kind of swung against us just a little bit too fast. But as you guys can see, we're managing our losses. The biggest loss we took today was 31 bucks. But the largest win that we've taken today is somewhere around 50 to 75 bucks. Okay. Now, not major wins, but when you're playing the market like this, that's not really what you're going for. You're not going for the, 10, 20, 30% gains with the suspended bull market. You're looking for 5-10 minutes of action at most to get in and out of this market. And believe me, if you leverage up the right way, which is what we're doing in this account, you're able to manage your risk properly while at the same time taking advantage of really explosive moves. Okay, guys, so that's what we're doing in this market. And you guys can see we're showing you examples of this. If we were to actually go into the charts here, let me pull this down a bit, just go the easy way. Right, like if I were to bring this up into a 15-minute chart, right, you guys can see where a lot of these executions are happening. But if I were to go into, say, a 1-minute chart, okay, let's squeeze in just a little bit more. You can see we're in and out, in and out, in and out, in and out. And it's very, very, very quick actions in the market. You see a very sustained, right? Lots of concentrations of orders here. But we're flowing with the market. When the market's going up, we're betting long. When the market's going down, we're betting short. And all we're doing is watching the order books in order to get our proper positions for this, okay? So again, full tutorial is gonna get ready to come out on this. I'm going to start working on that. I know a few people have also requested quite a few things in regards to just how to analyze the market, how to look at it from top down, things of that nature. So we're planning a lot of, basic types of tutorials. This type of trading, it is sort of a higher level, right? A lot of what we talk about on this channel, you can analyze the market in fractal ways, and what applies to lower time frames also applies to higher time frames. But what we're using here isn't necessarily levels, trend lines. There's no indicators on this chart when we're doing this trading, right? And we showed you guys an example of this in the previous video. We're just going strictly by price action in order books and where price may be reaching to compared to where it's been. All right, that's the only thing that matters when you're trading at this high of a frequency. It's not about where support and resistance is. It's literally about what candle is moving up and where that candle's destination, what it's actually reaching for, and what's getting in the way of that candle actually achieving that goal. All right, so again, big tutorial coming, so stay tuned for that.